German bond yields have jumped after politicians agreed to a historic debt overhaul. Germany has long been reluctant to take on debt, but the parties hoping to form its next government have agreed to create a €500 billion infrastructure fund and exempt defence spending from debt rules as they rush to rearm. Yields on Germany's 30-year bonds had their biggest one-day jump since 1998. Anna Macdonald is an investment manager at Aubrey Capital Management. Anna, why is this such a big deal for the market?
Well, historically, Germany has been very prudent when it comes to its debt management. And this is reflected by its debt to GDP ratio, which is in the mid-60s, which compares, I suppose, quite favourably to a country like France, which is at 110%. So it's always been very prudent in how it manages its affairs. And so this unlocking of infrastructure spend and the ability to spend more on defence means that they're going to have to borrow more, and that has pushed borrowing costs up, and that's why we've seen that move today.
What could a big ramp up in the production of tanks, weapons and other arms mean for Germany's economy, where obviously the manufacturing sector, especially cars, has really been struggling lately?
It's probably good to separate infrastructure spend from defence spend. Infrastructure spend does tend to have more of a multiplier effect. You do see that that you have to have local materials, you have to employ local people to do the work for infrastructure programs. So that does lead to more domestic growth, and that's being reflected today. We're seeing Heidelberg cement is up 14%. In fact, it has nearly doubled from its lows towards the end of last year. So we're seeing that effect. But those defence stocks are also rallying really sharply, such as Rheinmetall, and actually that's been across Europe and in the UK too. We've seen those defence stocks. Now, the economic effect, the local economic effect of that is not quite so clear because there's a lot of sourcing from overseas. In fact, Rheinmetall has got quite a complicated supply chain, which involves some basic materials coming from China, for example. So it's less easy to see how that boosts the domestic economy in Germany, but what it certainly does is it boosts those companies' earnings.
The ECB sets rates tomorrow, Anna. The market has slightly reduced its bets on the scale of cuts this year, as it looks like member countries are going to borrow significantly for defence. What's your forecast?
Well, yes, the Eurozone has managed to get inflation more under control, and that means that probably there's less focus now on keeping rates high in order to keep a lid on inflation. This extra borrowing does have the effect of hopefully boosting economic growth throughout the Eurozone. But I think it's actually more than that. It's seen as something that's essential to do, and that's without an economic hat on or an investor's hat on. It is seen as the responsible way to behave in order to protect the EU. And I mean, it's really the gauntlet has been thrown that NATO spending, instead of being 2% of GDP being a ceiling, it's actually now a floor. So there's a lot that needs to be done. So I think the ECB will be keeping a watching brief, and there's also the effect of tariffs, and we don't really know what the tariffs are that are going to be faced by the EU, so that's something else that they're going to be watching.
What about the UK, where this boost in defence spending is also expected to happen, but be paid for with cuts from elsewhere? Why doesn't the government feel it could follow the German example and bend its own debt rules?
Well, I mean, I think the experience of the Truss Kwarteng budget of 2022 has made the UK, whoever's in power, very cautious about how they treat the debt markets. So what they have decided is to take that spending out of international development spend and put that into defence spending. But that's probably not enough. And as we've seen, Keir Starmer has been talking about going above that 2.5% of GDP spend and increasing that. So in order to keep the borrowing costs under control, there's going to be a flurry of announcements, I suspect, ahead of the spring statement.
That was Anna Macdonald of Aubrey Capital Management. Don't forget, you can watch more videos on Reuters.com.